Hey everyone, welcome back to Corporate Decoder, the place where we decode the wild world of corporate filings. And today we're looking at ClearOne Inc. Now buckle up because ClearOne is doing something interesting with their warrants, and we're going to break down what that really means for them. Before we dive in, if you like getting the real story behind company moves, make sure to subscribe and smash that notification bell. Also, join our growing community on Discord. The link is in the description below. So what's the big news here? Well, ClearOne, or the company, as they call themselves, has made a move to tidy up some of their financial house by repurchasing warrants. Think of warrants like options that allow someone to buy a company's stock at a set price in the future. They've bought back some of these from a group called Lind Global Fund Group 2 LP. This is happening on September 10, 2025. And it's a pretty straightforward deal on the surface. Clearing out these outstanding warrants can sometimes be a good sign. Companies do this for various reasons. It can simplify their capital structure, meaning fewer claims on their stock in the future. It can also sometimes signal confidence from management. If they believe their stock price will go up significantly, they might not want to sell it at a discount through these warrants later on. Now let's talk about the specifics of what was repurchased. These weren't just any warrants, they were originally issued way back in September of 2021. That means they've been hanging around for a few years. The warrants gave Lind Global Fund the right to buy a total of just over 24,000 shares of ClearOne's common stock. And how much did this cost ClearOne to buy them back? They paid about 65 cents for each share that the warrants were tied to. So for all those roughly 24,000 shares, they spent a little over $15,000. That's a really small amount in the grand scheme of corporate finance, almost pocket change for a public company. What's the takeaway from this? Well, once they paid the money, these warrants are officially gone, kaput. They can't be used anymore, and ClearOne doesn't have to worry about them potentially diluting their stock or affecting their balance sheet in the future. It's a clean sweep for this particular batch. The document also tells us that this entire agreement is available for us to look at in more detail. It's filed as an exhibit, which is basically an attachment to this report. Think of it as the official receipt and contract for this entire transaction. Even though the actual dollar amount is small, the act of repurchasing warrants itself is what's interesting. So let's zoom out a bit and think about what this tells us. ClearOne is traded on the Nasdaq Capital Market, which is a significant stock exchange. Their common stock trades under the ticker symbol CARO. This is important context because it means they are a publicly scrutinized company, and actions like warrant repurchases are visible data points for investors. This report is signed off by Derek Graham, who is the Chief Executive Officer of ClearOne. Having the CEO personally sign off on these reports emphasizes the importance of the information contained within them. It shows that the company's leadership is directly involved and confirming the accuracy of these filings. Now, looking at this filing, we don't have large financial tables with revenue or profit figures here. This is a very specific announcement, an 8K filing. These are for significant events that shareholders should know about, like mergers, acquisitions, or in this case, important contractual changes. So while we can't dissect a massive income statement, we can interpret the strategic move itself through a Warren Buffett lens. What would the Oracle of Omaha think? Well, Buffett always looks for companies managed by intelligent people, operating in industries they understand, and trading at attractive prices. This warrant repurchase, while small in dollar terms, could be seen as a signal if ClearOne's management believes their stock is undervalued, or that its future prospects are strong and will push the stock price above the warrant exercise price, then buying back these warrants at a discount is a smart capital allocation decision. They are essentially buying back a piece of their company at a favorable price. However, we need more context. We don't have the company's overall financial health here. Is ClearOne consistently profitable? What's their cash flow situation? If they are struggling to generate cash, spending even $15,000 might be a concern if it impacts their ability to invest in growth or meet other obligations. But given the modest amount, it's more likely a strategic housekeeping move. The risk here is minimal in terms of cost, but the opportunity is to further streamline their capital structure, potentially making the stock more attractive to investors by removing a future dilution event. The ultimate assessment of this move depends heavily on ClearOne's broader financial performance and future strategy, which isn't detailed in this particular filing. It's a small step, but in the world of corporate finance, even small steps are often taken with a purpose. Alright, that's our breakdown of ClearOne's warrant repurchase. What's your take on this move, and what do you think it signals for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more discussions. Thanks for watching, and we'll see you next time.